What is happening, everyone, and welcome back to iPad Focus. The news cycle is absolutely on fire this week, and we've got some massive updates that you absolutely cannot afford to miss. From unexpected shifts in design philosophy to major strategic moves in the digital space, the landscape is changing faster than ever. We're diving deep into the decisions that are shaping the future, and trust me, you'll want to be in the know. Get ready for a rapid-fire rundown of what's making waves, what's causing a stir, and what could be coming to a device near you sooner than you think. Stick around, because this is the information you need to stay ahead of the curve. Let's get into it. First up, we're dissecting a fascinating look at the fine art of change and why not all shifts are created equal. We'll explore how a well-intentioned rebrand can go spectacularly wrong, serving as a cautionary tale for industries everywhere, including a deep dive into potential missteps in the tech world. Is it improvement, or just change for change's sake? We break it all down. Then, we're talking Apple stock and the whispers that could be driving its movements. From cryptic logo art to major retail expansions, we're looking at the signals that investors are watching and what they might mean for the future of one of the biggest names in tech. Get ready for some sharp analysis on what's powering the performance. And finally, we're diving into a strategic partnership that could redefine how we access our favorite audio content. Apple Music is making a major play to expand its reach, and we've got the inside scoop on the implications for listeners and the competitive landscape. You won't want to miss this. Make sure you're subscribed, hit that notification bell, and let's get started. The perils of misguided change. When companies embark on rebranding or redesign efforts, the line between genuine improvement and superficial alteration can become dangerously blurred. This week, the restaurant chain Cracker Barrel found itself at the center of a public outcry following a significant rebranding initiative. Critics argued that the changes, which included a new logo and modernized decor, missed the mark entirely, failing to address the core issues that patrons actually cared about. This situation serves as a potent reminder that not all change equates to progress, a lesson that resonates deeply within the tech industry as well. The public's reaction, often drawing parallels to the infamous New Coke saga, highlighted a fundamental disconnect between the company's vision and its customer base's desires. Many felt the rebranding stripped away the nostalgic charm that defined the Cracker Barrel experience, replacing it with a generic, contemporary aesthetic that felt out of place. This sentiment underscores a critical point. Consumers often seek comfort and familiarity, especially in establishments that evoke cherished memories. The impulse to sterilize a beloved brand, as some critics put it, can alienate loyal customers who value the unique identity and emotional connection they have with the brand. The core of the issue lies in understanding the why behind any proposed change. Is it to enhance the existing strengths and address tangible problems, or is it merely a reaction to fleeting trends? The Cracker Barrel case suggests the latter, with the changes appearing to prioritize a modern image over the authentic, sentimental appeal that has long been its hallmark. This misstep is not unique to the hospitality sector. The technology world, in particular, is rife with examples of companies that have stumbled by conflating change with improvement. Dennis E. Powell's recent commentary touched upon similar impulses within the Linux community, where interface overhauls have sometimes disrupted user workflows without clear benefits. Microsoft's history offers a particularly stark illustration. The company's response to the rise of mobile computing, especially the iPhone, initially led to a drastic overhaul of its Windows operating system. Under Steve Ballmer, Microsoft's drive to adapt to the mobile-first era resulted in Windows 8, a radical departure from the familiar desktop experience. This change, intended to embrace touch interfaces, was implemented on devices that often lack touchscreens, leading to widespread user confusion and frustration. The problem was compounded by the fact that Windows 7, a widely praised and stable iteration, had already laid a solid foundation. Instead of building upon its strengths, Microsoft's pursuit of a new direction alienated its user base, who valued Windows for its predictability and backward compatibility. The subsequent release of Windows 10, which largely reverted to a more familiar interface, demonstrated a clear recognition of the misstep. This pattern of disruptive change followed by a course correction is a recurring theme. even in the automotive industry, there's a noticeable shift away from all touchscreen controls, as manufacturers realize the importance of tactile feedback for safety and usability in vehicles. The underlying principle is that successful change must be purposeful, enhancing the core function or experience rather than detracting from it. Apple, under Steve Jobs, often exemplified this ideal. The transition from the classic Mac OS to Mac OS X, while a massive undertaking, was underpinned by a robust Unix core that provided a stable and powerful foundation for future innovation. The evolution of its interface, from the early awkward design to the cleaner aesthetics of iOS 7, was driven by a desire to improve usability and highlight content. However, even Apple has faced criticism for changes that some perceived as prioritizing style over substance, such as the early skeuomorphic designs or recent interface modifications that critics argue hinder discoverability. The challenge remains: how to innovate without sacrificing the user experience that defines a product or brand. The ultimate goal should always be improvement, making things better, not just different. The temptation to chase the next big thing can be overwhelming, but history repeatedly shows that genuine progress stems from a deep understanding of user needs and a commitment to enhancing, rather than discarding, what already works. The ongoing debate around Apple's liquid glass design language and its potential impact on usability highlights the continuing tension between aesthetic evolution and functional integrity. It serves as a crucial reminder that leadership in any field requires not just the courage to change, but the wisdom to ensure that change serves a clear, beneficial purpose. The success of any brand hinges on its ability to evolve in ways that resonate with its audience, fostering loyalty through meaningful improvement rather than alienating them with gratuitous alterations. This constant struggle between genuine improvement and mere change highlights how critical thoughtful design is. Next, we're investigating how subtle visual cues in the digital realm might be sending major signals about future tech. Apple's logo art sparks speculation on future features and market moves. In the ever-evolving landscape of consumer electronics, even the smallest details can ignite a firestorm of speculation, particularly when it comes to tech giants like Apple. Recent attention has turned to the logo art designed for an upcoming Apple launch event, scheduled for September 9th. This visually striking emblem, featuring a captivating blend of blue and orange hues, has become a focal point for analysts and enthusiasts alike, who are meticulously dissecting its potential meanings. The immediate interpretation points towards new color schemes for upcoming devices, a strategy Apple has employed previously, recognizing that for many consumers, their technology is as much a fashion statement as a functional tool. The vibrant blue and orange palette could signify a refresh in the aesthetic appeal of their product line, aiming to capture a wider market segment that values personal expression through their gadgets. However, the speculation doesn't stop at mere aesthetics. A more intriguing hypothesis links the logo's design to advanced cooling systems, specifically the integration of vapor chamber technology into future iPhones. The visual resemblance of the logo's diffusion pattern to thermal imaging has fueled this theory, suggesting that Apple might be preparing to implement enhanced thermal management solutions to support more powerful processors and longer battery life. Such an innovation would be a significant upgrade, addressing one of the key challenges in designing high-performance, compact devices. This potential technological leap, coupled with aesthetic updates, underscores Apple's continuous drive for innovation and refinement. Beyond product design, Apple is also making strategic moves to bolster its physical presence and market penetration. The company is set to open its fourth Apple store in India, located in Khorgyan Park, Pune, on September 4th. This expansion is particularly noteworthy given the strong performance of its previous retail outlets in the country. Reports indicate that Apple's first two stores in India, Apple BKC in Mumbai and Apple Saket in Delhi, have achieved double the average revenue of other electronics stores in their respective areas. This success highlights Apple's ability to create compelling retail experiences that drive sales and reinforce brand loyalty, even in international markets. Such a robust performance is crucial at a time when Apple, like many in the tech sector, is keen to maintain and grow its hardware sales amidst increasing competition and market saturation. The financial markets are closely watching Apple's every move. On Wall Street, the consensus rating for Apple stock, AAPL, remains a moderate buy, supported by a significant majority of analysts recommending the stock. With 15 buys, 11 holds, and only one sell recommendation in the past 3 months, the sentiment is largely positive. Despite a modest 1.25% increase in its share price over the last year, the average price target of $238.45 suggests an anticipated upside potential of approximately 3.75%. This outlook reflects investor confidence in Apple's ability to continue innovating and executing its business strategies effectively, from product development and design to retail expansion and market reach. The interplay between product rumors, retail strategy, and financial performance paints a picture of a company that is strategically navigating the complexities of the global market, constantly seeking new avenues for growth and customer engagement. The upcoming event on September 9th is therefore not just about unveiling new products, but also about reaffirming Apple's position as a leader in technological advancement and market influence. These strategic plays and design hints demonstrate Apple's multifaceted approach to market leadership. Now, let's look at how Apple is leveraging its existing services to expand its footprint even further. Jim Cramer sees continued potential for Apple stock amidst market gains. In the dynamic world of finance and technology, seasoned market commentators often provide valuable insights into the trajectory of major companies. Jim Cramer, the well-known host of CNBC's Mad Money, has recently expressed a bullish outlook on Apple AAPL, suggesting that the tech giant still possesses significant untapped potential, even following a notable rally in its stock price during August. This optimistic assessment comes at a time when Apple has experienced a period of upward momentum, leading some investors to wonder if the stock has reached its peak or if further growth is on the horizon. Cramer's commentary suggests that despite the recent gains, Apple's diversified business model, strong brand loyalty, and continuous innovation pipeline provide a solid foundation for sustained performance. He implies that the company has a lot up its sleeve, hinting at future product launches, service expansions, or strategic initiatives that could further drive shareholder value. This perspective is particularly encouraging for investors who have been tracking Apple's performance, as it suggests that the current stock appreciation may not be the culmination of its growth, but rather a stepping stone towards future milestones. Apple's ability to consistently reinvent itself and adapt to changing market demands has been a hallmark of its success. From its groundbreaking personal computers and iconic iPods to the revolutionary iPhone and the expanding ecosystem of services like Apple Music and iCloud, the company has demonstrated a remarkable capacity for innovation. This track record instills confidence that Apple will continue to deliver compelling products and services that resonate with consumers worldwide. Furthermore, Cramer's remarks may also be influenced by Apple's ongoing efforts to diversify its revenue streams beyond hardware sales. The company has been aggressively expanding its services division, which includes the App Store, Apple Music, Apple TV+, iCloud, and AppleCare. This strategic shift towards recurring revenue not only provides greater financial stability, but also strengthens customer engagement and loyalty by embedding Apple products and services deeper into users' daily lives. The market's reaction to Apple's performance is often closely tied to its ability to meet or exceed expectations in these various segments. Positive analyst ratings and a generally favorable consensus on Wall Street further support the notion that Apple remains a fundamentally strong investment. As the company continues to navigate the competitive tech landscape, its focus on user experience, ecosystem integration, and a commitment to privacy are likely to remain key differentiators. Cramer's endorsement, while not a guarantee of future results, serves as a significant signal to the market. It reinforces the idea that Apple's strategic vision and operational execution are well-positioned to capitalize on emerging opportunities and overcome potential challenges. For investors seeking exposure to the technology sector, Apple continues to represent a compelling proposition, backed by strong fundamentals and the potential for continued growth, as suggested by influential voices like Jim Cramer. The company's ability to consistently deliver value to its customers and shareholders alike positions it favorably for the long term, making its stock a topic of ongoing interest and positive sentiment. This focus on potential and strategic foresight is key to understanding market leaders. Speaking of strategic foresight, Apple is making some bold moves to reach new audiences with its audio content. Apple Music expands global reach through strategic TuneIn partnership. In a significant move to broaden its audience and compete more effectively in the competitive streaming market, Apple Music has announced a strategic partnership with TuneIn, a leading global platform for live audio. This collaboration, reported by the Wall Street Journal, will grant TuneIn's massive user base of 75 million monthly listeners access to Apple Music's 6 live, ad-free radio stations for the first time. This initiative marks a crucial step for Apple in extending its reach beyond its own ecosystem and tapping into new listener demographics. Starting August 27th, Apple Music's curated radio stations, including Apple Music One, Hits, Country, Club, Chill, and Musica Uno, will be available for streaming on TuneIn's platform. This integration is designed to expose a wider audience to Apple's unique radio content, which offers a blend of music, interviews, and cultural insights curated by a global roster of artists and hosts. For Apple, the primary objective is to leverage TuneIn's extensive reach to attract new subscribers to its paid service. By offering a direct link and prominent promotion within the TuneIn platform, Apple aims to convert these new listeners into long-term, paying customers, thereby strengthening its subscriber base. The strategic importance of this partnership becomes even clearer when considering Apple Music's position relative to its main competitor, Spotify. Recent data from MyDie research indicates that Apple Music has been experiencing a decline in its subscriber market share, particularly in the United States, where its share dropped from 30% in 2020 to 25% by the end of last year. In contrast, Spotify's market share grew from 31% to 37% during the same period. Globally, Apple's share has also seen a dip, falling from 16% to 12% since 2020. Several factors may contribute to this trend. A key differentiator is Spotify's offering of a free, ad-supported tier, which serves as a powerful funnel for converting users to its premium subscription. Apple Music, on the other hand, does not currently offer a free tier. Its primary methods for acquiring new users rely on free trials bundled with new device purchases and its distinctive radio offerings. By partnering with TuneIn, Apple is attempting to create a new, accessible entry point for potential subscribers, offering them a taste of the Apple Music experience without the initial commitment of a device purchase or a direct subscription. This move by Apple Music signals a broader strategy to enhance its competitive edge by expanding its accessibility. Reaching 75 million potential new listeners through TuneIn's platform is a significant opportunity to capture market share in an increasingly saturated audio streaming environment. The success of this partnership could influence Apple's future strategies for user acquisition and engagement, potentially leading to further integrations with third-party platforms. On the financial front, Apple AAPL stock maintains a moderate buy consensus rating from Wall Street analysts, with 15 buys, 11 holds, and 1 sell in the last 3 months. The average price target of $238.45 suggests a potential upside of approximately 3.81%, reflecting continued investor confidence in Apple's diversified business and strategic initiatives, including this latest venture into expanding its audio streaming reach. This strategic expansion shows Apple's commitment to growing its service ecosystem. Now, let's wrap up with a quick recap of all the top stories we've covered today. And that's a wrap on today's essential updates. We've seen how crucial thoughtful change is, with Cracker Barrel's misstep serving as a stark warning. Apple's stock is buzzing on rumors hinted at in logo art, suggesting new features and market expansions are on the horizon. Plus, Apple Music is making a major play to capture new listeners through its partnership with TuneIn, aiming to boost its subscriber base against fierce competition. Don't miss out on any of these critical developments. Hit that subscribe button, ring the notification bell, drop a comment below with your thoughts, and follow us on all social platforms for even more. We'll see you in the next one.